Sean Devlin, Mortgage Man. Hey, Sean Devlin, the Mortgage Juice Man, coming at you with Whacked Out Wednesday. Oh, yeah. So it's Whacked Out. People don't know how to look or do these bank statement loans. So I'm going to talk about bank statement loans today. Help out some whacked outness, get all correct. So, first things first. There's a ton of companies out there that do bank statement loans. However, it's how income is calculated that makes the difference, ladies and gentlemen. Loan officers of the world, look at the bank statement. Okay, so first things first, look at the bank statement. You see the bank statement has a bunch of transfers. You're not going to be able to use the transfers. You just don't look at the top and see the total of deposits and add it all up. That's not how you do it. Okay? So, you got to make sense out of what you see. So, if you look at all the deposits and you see that it looks congruent with what the client does for a living, you could add up those deposits, take away any transfers, any returns from merchandise that isn't deposits from their business. Now, once you get a total of all deposits on the bank statements you are using, you're then going to have to take into consideration the second part of the equation of looking at how income is calculated. It's the expense ratio. And so some banks say, oh, well, you can do 50% of all the deposit, or 60%, or 70%. They're taking a 30% expense ratio into consideration immediately. Well, check it out. If you have 10 or less employees and $2 million or less that you gross every year, we allow you to have the client produce a P&L and an expense statement. So you would take into consideration whatever those expenses that they have. Let's say it's only 15%. Well, then you would be able to use 85% of all deposits. It just has to make sense based on the industry that the client is in. Okay, talk about bank statement loans. At Blue Point Mortgage, we have a 24-month, a 12-month, and a 3-month. Now, the 24 and the 12, the rules apply that I just explained. For a 3-month bank statement program, you will have to have a CPA prepared 24-month P&L and expense statement. Can't be from the client, unlike the other programs. However, you can go to 90% LTV with these bank statement programs. They're fantastic. When you go to 12 months, you lose 5% LTV. Have yourself a wonderful day. It's a great bank statement loan program out there. We do them well. Just last month, I closed one in 21 days. So it does not need to take a long time to do. Check it out. Blue Point Mortgage, get on point. Share, interact, like, repeat. As always, shout well.